Bloomberg Audio Studios. Podcasts, radio, news.
This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy. Plus, global business, finance, and tech news as it happens. The Bloomberg Businessweek Daily podcast with Carol Massar and Tim Stenovec on Bloomberg Radio.
Hi, everyone. Welcome to the Bloomberg Businessweek Weekend podcast. It was the final Federal Reserve meeting of the year. As expected, Fed officials cut rates by 1/4 of a point, their third consecutive interest rate reduction. And I gotta say, the U.S. Central Bank also, again, saying that when it comes to the dual mandate, there are risks on both sides. And so it's a challenging environment for the Federal Reserve. The Fed also maintained their outlook for just one cut in 2026.
This time, there were 3 dissents from both ends of the policy spectrum, highlighting divisions among policymakers over weakness in the labor market or stubborn inflation. Fed Chair Powell also emphasized the committee is in a wait-and-see mode. He noted that for the third FOMC meeting in a row, quote, there is no risk-free path forward. We're calling it also a challenging situation.
Yeah, we got the message, Jay Powell. Got it. Loud and clear. Hey, lots to unpack. So for the latest, do head over to Bloomberg.com for the latest on what economists are expecting for 2026 when it comes to monetary policy. As for this hour, we're going to talk about life at the Fed after Jay Powell with Steve Moore. He's a former economic and strategic advisor to President Trump during both of his administrations.
Plus, how cutting rates may affect bank lending today and into next year. Also, we talk power with NextEra and their push to move into data centers and gas.
I love this. This is one of the big stories. One of the big stories of the year. One of the big stories, certainly, of this week. All of that to come. We begin with this week's Fed decision. President Trump is expected to announce a new Federal Reserve chair early in the new year, although there was some speculation it could come in the next couple of weeks. It's, to say, a moving story, moving target. The next Fed chair will take over Jay Powell's term, which ends in May of next year.
So with immediate thoughts of this week's Fed decision and on Fed leadership come 2026.
We've got a great roundtable. Steve Moore is with us. He's co-founder and chair of the nonprofit Unleash Prosperity. He's a former economic and senior policy advisor to Donald Trump in 2016 and 2024 and served as chief economist and distinguished visiting fellow at the Heritage Foundation for 12 years.
Yeah, he's also written a bunch of books, including Trumponomics, Inside the America First Plan to Revive Our Economy. Also another one, The Trump Economic Miracle. And you might remember back in 2019, President Trump selected Steve Moore for the Federal Reserve Board of Governors, which Moore ultimately withdrew from. So we have a lot to unpack and talk about. Steve joins us from Palm Beach, Florida. Great to have him here. Also with us is Bloomberg Economics U.S. and Canada economist Stuart Paul. He's right here in our Bloomberg Interactive Broker studio. Steve, I want to kick it off with you. Welcome. Nice to have you here on Bloomberg. Your key takeaways from Fed decision.
Well, it was certainly Wall Street was happy with what happened. It was very expected that the Fed did exactly what they announced. Trump, of course, wants more rate cuts. Look, inflation has come down. And it's still not where we want it to be. We want it to be at the 2% Fed target. And so we're running about 2.7, 2.8. So there's still work to be done to bring inflation down. Of course, if you bring inflation down, affordability goes up. But look, this is a booming economy right now. It is so hot. Trump is right about that. And 2026 is going to be a monster year for growth and for incomes and I believe for equities.
If you were on the FOMC and a voting member, how would you have voted? What would you have wanted to see?
I would have done exactly what they did.
You wouldn't have gone 50 basis points like Stephen Myron.
No, I'm a little bit more of an inflation hawk than Stephen. I know Stephen, he's a smart economist. I lean towards making sure, I think the top priority of the Fed should be to make sure that we bring that inflation rate down to the target level. We're not there yet. And, look at as a political matter, Trump really needs to continue to bring that inflation rate down because people are still angry about prices.
Mr. Moore, it's really difficult to square the circle between being an inflation hawk and voting for or advocating for additional rate cuts when you see somebody like President Trump focusing so much on affordability, but at the same time calling for the Fed to cut rates even more. How do you really square the circle? How would you rationalize voting for a cut while also being an inflation hawk?
I believe that Wall Street puts way, way, way too much influence and interest in Fed rate cuts. I mean, the short-term interest rate has become almost irrelevant. So I really don't believe that it's all that important, frankly, whether it was a quarter point or 50%, 50 points, or doing nothing. I don't think that it makes all that much difference. We should have learned the lesson, by the way. What we what we'd all like to see is for those mortgage rates to come down and the 10-year Treasury interest rate to come down. Well, the Fed doesn't control that. I know that may surprise people watching this. The Fed has no, impact on the 10-year Treasury or the 30-year mortgage. And we know that, by the way, in what happened in 2024 when the Fed cut the discount rate and what happened to the Fed funds rate and what happened to the mortgage rate in the 10-year Treasury. It went up. So I don't overly obsess about Fed rate cuts. I think we're in a pretty good look. The most important thing is this incredibly healthy economy. We've got hundreds of billions of dollars coming into the U.S. economy of foreign investment. We've got the highest S&P 500, the highest Dow, and the highest NASDAQ in the history of the country. People are making huge amounts of money, and this is a bet. When the markets go up, this is a bet that policy will be well guided and that American companies are going to make money. So I have a hard time really having much problem with the direction that we're going in with respect to this economy. And don't forget, starting in January, people will start to see middle income people will start to feel the impact of those big, beautiful tax cuts that passed in terms of less money deducted from their paychecks and taxes, and the no tax on tips, the no tax on overtime. Those are all positive features that will help middle-class Americans.
That's a really interesting point, that fiscal policy is going to be especially accommodative in 2026. And I think that one thing that's interesting is whether we're going to see monetary policy that's equally accommodative or even more so. And that's going to really depend on who we get as the next chairman of the Federal Reserve and chairman of the FOMC. What do you make of the White House's floating of a trial balloon with Kevin Hassett about 3 weeks ago, and then seeming to reconsider? If there's anybody in the world who recognizes how difficult of a process it can be to make it through the Senate, it's you. And so I'm really interested to hear what your thoughts are about what's going on in the White House and on Capitol Hill in terms of whipping up the votes to support someone perhaps like Hassett or Warsh.
I like them both. I mean, I think the two Kevins, I've been saying this for 2 years now, that, it should be one of those two as the Fed chairman. I also like Larry Kudlow, but I don't think Larry probably is in the runnings to do it, but he'd be an excellent Fed chair as well. But look, the two Kevins are monetary experts. They're extraordinary economists. I really, truly, either one of them, I think, would be fantastic picks. And I think they would also keep their eye on the most important thing that the Fed needs to do, which is defend the dollar. Defend the dollar, make sure that it's strong and stable. That's all the Fed needs to do. It doesn't have to worry about jobs. It doesn't have to worry about climate change or any of these other things. The most important thing is to keep prices stable and the dollar strong. And I think both would do that.
Steve, you have some great insight into President Trump behind closed doors. He did nominate you for a Fed governor position. You ultimately backed out of it. But I'm just curious, what were your conversations with President Trump, or what insight can you give to our audience and investing audience trying to understand, read the tea leaves? Because we do have a president that most would agree that he's transactional. And so I think we're trying to understand that in terms of any appointments, is that seen as an expectation that you're going to do the President Trump's bidding and listen to him if you are at the Fed in terms of what needs to be done in cutting rates, if that's what he wants?
Well, look, my opinion is that it is valuable to have an independent Fed, but I also believe that the Fed needs to be accountable. And in my opinion, it hasn't been accountable in the last few years. That's why we got, a 9% inflation under the current Jerome Powell. And
wouldn't you say that 9% was the result of the pandemic and incredible demand? I mean, there were some, unexpected events
and
that created
fiscal policy too.
Fiscal policy. There was a lot of money sloshing around. Wouldn't you concede that 9% inflation, any president or any Fed chair would have had to deal with that?
Well, listen, I mean, I do think that Trump made a big mistake in that he passed a big, massive spending bill right before he left office. So you make a good point, but it was catastrophic. Everything that happened under COVID, we made the biggest mistake in the history of the United States in shutting down our economy, shutting down our schools, shutting down our hospital. It was outrageous. And I think we've hopefully learned that lesson that we'll never do it again. But you are quite correct that what caused the inflation, and I hope we remember this lesson for many, many decades to come, is that when you massively spend $4 trillion, guess what? You're going to have inflation. And it didn't stimulate the economy. It caused huge reductions in real incomes for middle-class people. It destroyed middle-class incomes. They lost massive amounts of money because we very stupidly printed all this money and spent it, dropped it out of helicopters. And that's a policy that's never worked.
Look, I think it's an important, you bring up a lot of important points about what happened during the pandemic and the causes of inflation. But to Carol's point, you do have this direct line to the White House and to the president. You advised him back in 2016. You advised him in 2024. How would you characterize your relationship with him right now? And to what extent are you, and how often are you speaking to him about economic matters that hit the United States?
What I tell him is that I think the tax cuts have been enormously beneficial, and it's not accommodative fiscal policy on the tax side. What it is, I mean, like one of the most important things we did in the Big Beautiful Bill was we are allowing businesses to instantly capitalize their expenditures and write them off instantly. And I believe that's one of the reasons we're seeing this capital boom in the United States. I mean, if you look at the last 9 months, capital investment has been really strong as a result of this tax cut. So it wasn't really meant to just pump money into the economy. It was meant to incentivize through lower tax rates, lowering the corporate rate, giving expensing, lowering the individual income tax rate. Those are pro-growth, pro-supply side policies that actually help bring inflation down. I mean, it's very simple. If the economy produces more, prices go down.
Hey, one of the things I do want to go back to, this idea of transactional. And again, I want to go back to the insight that you have in having conversations with President Trump before he, made a nomination for you to join the Fed and be a governor. Because we've heard the president come out and say Jay Powell has been very bad for our country. He's terrible. He's a terrible Fed chair. I'd love for him to lower interest rates. I call him too late. I'd love to fire him. Tell us about, would there be pressure by President Trump with who he appoints for the next Fed chair? And would there be an assumption by the person who takes that position to kind of do the president's bidding? Give us some insight if you could.
Well, I'll put it a little differently. It's a good question. First of all, when I was nominated to be on the Fed, Trump never really, asked me about, well, would you cut rates or would you raise rates or so on. He had trusted in me as an economist that I would get it right. So there was no pressure to sort of do his bidding. Now, with respect to Kevin Hassett or Kevin Warsh, which I think there's a good chance it's going to be one of those two, what he is doing is picking someone. You say do his bidding. He's picking someone who agrees with his overall economic philosophy. And that's exactly what a president should do. I don't think that means undue influence on the independence of the Fed. But I think it's basically, presidents deserve the monetary policy they want, frankly, and so, I think they will do. They agree with Trump on monetary policy, and that's one of the reasons one of the two of them will be chosen. But I can't think of two economists I admire more than Kevin Hassett and Kevin Warsh.
It's interesting that you bring up President Trump's economic philosophy, because I think that if you were to press him to describe his economic philosophy with regards to monetary policy, he would just say he's a low interest rate guy. So is the expectation going to be from Kevin Hassett or Kevin Warsh that they will just deliver low interest rates?
You make a good point. The one thing that Trump has often said to me is that he likes low interest rates. And I've always said, well, Mr. President, low interest rates are good, but we also want to make sure we don't cause inflation. And so that is the kind of dual competing interests here. But I think he gets it that, what destroys a presidency is inflation. For whatever we saw Jimmy Carter lose because of inflation. We saw Jerry Ford lose because of inflation. We saw this. I think the major factor in this last presidential election was inflation. Americans hate higher prices. It's one of the reasons they're still in a foul mood on the economy. So I believe that Kevin Hassett and Kevin Warsh, either one of them will be an inflation hawk, and I predict we will bring that inflation rate down to 2%.
But one does wonder, since he's not running again, assuming no third term, that maybe he doesn't care if there's inflation. I'm just going to put that out there. Okay. I know you want to go somewhere else.
I mean, the Republicans certainly care, and affordability is going to be a key message for them for everybody in the midterm.
We shall see.
Hey, we only have 30 seconds left, Steve. I just want to take a sharp turn here. Because you are an economist and you watch what's happening closely, the U.S. taking a stake in publicly traded companies such as Intel, MP Materials, and others.
I don't like it.
Why not?
Hate it.
Why?
No, never. I've spent most of my career trying to privatize, not nationalize. So it's one of those issues I disagree with the president on. I believe in separation of business and state, and the less the government does to influence business decisions, I think the better.
You're old school that way.
Yeah, I am.
It's a different.
I hope it's not old school.
Definitely a different Republican Party, at least from a business perspective today.
I think there's a lot of investors out there too who certainly would agree with you. Steve, thank you so much. Really enjoyed this. Steve Moore, co-founder and chair of the nonprofit Unleash Prosperity, and of course, as we said, a former economic and senior advisor to President Trump in both of his terms, and of course, our great thanks to our own Bloomberg Economics U.S. and Canada economist Stuart Paul.
You're listening to the Bloomberg Businessweek Daily podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business App. Or watch us live on YouTube.
Let's get more on this week's Fed decision and really the macro environment when it comes to consumers and businesses. And also what we are seeing when it comes to bank lending today and maybe an outlook into the new year. One company, one bank paying close attention to this is Ohio-based Huntington Bancshares. The bank has a market cap of nearly $27 billion and recently has been expanding with targeted acquisitions. It's had a pretty busy year, Tim.
With perspective on interest rates, the consumer, and the 2026 financial outlook, we turn to Zach Wasserman. He's Chief Financial Officer of Huntington Bancshares, and he joined us in the Bloomberg Interactive Brokers studio.
Zach, great to talk with you again. Especially appreciate you coming into the studio. Did the Fed get it right?
I think they did. The analysis they did that showed the labor market still, of course, softening to some degree, but inflation pressures continuing to be present, and with a potential for some higher price pressures as we go into the early part of next year. I think they got it right, and I think the outlook they've signaled probably one additional cut into 2026. The market, by the way, is baking in 2 cuts for 2026. Somewhere in that range seems very likely, and I think helpful for the economy at this point.
All right, Zach, so if you were sitting down with Jay Powell, what would you want to ask him right now?
That's a good question. What is he going to do after he leaves his job?
Do you think he will leave his job in the spring?
I would think so. That's my sense.
But do you think then also Kevin Hassett is a given? Like, we're seeing that the president's meeting with Kevin Warsh. So it feels like things are still fluid.
Well, I'm not a party to those discussions. I have no clue, but I certainly think that as they think about how they're going to chart their course on interest rate policy. I think the path that they've chosen at this point appears to be the right one. Very data reliant. Appears to be, we're landing the economy in a sweet spot.
Okay, so Carol, are you done with Fed stuff? Can I talk M&A here?
Yes, I want to.
You guys have been so acquisitive.
Yeah,
there's been a lot of M&A in your space. You've been much more aggressive than others in your peer group. Why now in terms of the aggressive posture?
Well, I wouldn't characterize our posture as aggressive. It's really, for us,
expansive. That's for sure.
Well, certainly it's expansive. It's been a dynamic year for us, but primarily from an organic growth perspective. Huntington has been growing way faster than almost any other bank in the industry at this point from an organic perspective. And so when we think about these partnerships that we've announced, we have the pleasure to announce 2 partnerships this year. It's really all in service of sustainable long-term organic growth. We want to.
You call them partnerships, not acquisitions.
We really do, and that's intentional.
Yeah.
The partnerships we've created with Veritex Bank and then Cadence Bank really are, in fact, bringing these organizations together, making 1 + 1 = 3. And for us, we'll be a powerhouse in Texas. We'll be present in a lot of terrific markets across the South. And really, together, we're going to be a much stronger organization. So they really are partnerships, and ultimately all in service of long-term sustainable organic growth.
So, I've got family in South Carolina. They've noticed some economic softness, and certainly the Veritex deal was about North Carolina and South Carolina. They've seen softness in real estate, which had been on fire. I'm just curious, your expansion plans there, your organic growth that you want to do there, I think you guys were looking to open more than 50 branches in those states. So is that impacting any of the growth, or you're on target for that?
We're on target for that. In fact, next year, we expect to open 1 branch every 2 weeks in the Carolinas. So we've got some products for your family, and we'd love to take you on as a customer. But we're really excited about that. And in fact, the market reception we've had so far has been tremendous. We've opened several new branch locations just in the last few months, and each of them have beat their first-year deposit plan before they've even opened, to give you a sense, because the market reception has been so strong.
So I know, I can ask the question, but in terms of what you have planned, any more acquisitions?
Look,
how are you thinking about it?
The way we're thinking about it is if something comes up that's
KeyBank
opportunistic.
CEO said they expect more. They expect more acquisitions to happen. Do you?
I think the industry has been consolidating for 20 years. It will continue to consolidate. For us, if something comes up that's accretive to organic growth, that's a great fit for us, we'll consider it. But otherwise, it's all about organic growth for us.
Geographically, what's an area of the country that's of interest to you where you don't have a presence?
We love the markets that we're in right now.
Yeah.
Our markets, we're going to be in 21 states, covering more than 50% of the population of the country, and in markets collectively that are growing 30% faster.
But that means a lot of states you're not in.
True. I think our view is we're not trying to be a national bank. We're trying to be
You are not trying to be a national state.
No, explicitly.
Okay.
We want to be deeply present in the states that we're in.
So would that mean that if there were more expansion, it would be within the states that you're already in, so you can become bigger in those places rather than expanding the geographic footprint of places you're not already?
If something fit, I think that's the right characterization.
Okay.
Yes. But I think, again, that's not our objective is not M&A per se. Our objective is organic growth.
The Goldman Financials Conference, and I think that's part of also why the KBW Bank Index really rallied in a big way. Outperformance about 2.5% higher. Many said, and you guys presented there too, that they're seeing a stable consumer despite worries of an economic slowdown. What are you guys seeing?
We're seeing the same. I think we just we're up on stage this morning ourselves at the conference. Stable consumer. Pipelines continue to be strong from a lending perspective on both consumer and commercial. Profitability is very strong. Credit is very stable. It really looks like a solid economy from our perspective. If all you did was read our internal reports, it would belie what you're hearing in terms of the headlines, which is very encouraging as we go into the end of this year and into next year.
Why do you think you're seeing that distinction? Like you're seeing something, the anecdotes and indeed some data are showing softness in places. Why are you seeing strength?
Well, look, I think in total, you're seeing consumer spending continues to grow. Corporations, I think, are more confident today than they would have been at the middle of this year when there was more uncertainties in the environment. We've had a tax bill pass. We've had more tariff certainty come into the environment. The government is now functioning again. I think as companies are looking forward into 26, they're seeing this is another year of growth. The Fed just came out today saying that the outlook for economic growth next year was more than 2% GDP. And so that looks like an environment where we should continue to be investing, continue to be expanding, and from a commercial and consumer perspective. There is, of course, a bit of a so-called K-shaped economy happening. And I think certain segments of the consumer environment have faced pressures, particularly from inflation and higher interest rates. Our bank does not have much exposure to that. And I think in many cases, the net of growth has continued to be positive.
Who is your typical consumer?
From us, we're focused on the mass affluent consumer base, and then
so
from
that's
a commercial.
You specifically target.
We do.
Okay, sorry, forgive me. Go ahead.
We target the mass affluent, and we've got a very strong base of consumers that are in that segment, and then of course we also one of the largest small business banks and commercial banks in the country as well.
What does mass affluent mean in your markets?
Typically we're looking at customers who have a net worth of or income of more than $100,000, net worths that are high. And of course, we bank everyone, and our tagline is "Welcome to all," and we mean that. But for the most part, our business is concentrated in that mass affluent segment.
So, loan origination activity. Tell us about what you're kind of seeing since you last reported.
Yeah, in fact, we just this morning showed quarter-to-date loan growth of $2.8 billion sequentially from last quarter.
Yeah.
We're growing at about 8 to 9% year on year right now. And actually exceeding our own forecast that we set just a month ago.
In the Fed press conference today, I found what Jay Powell said about AI really fascinating, this idea of productivity.
Yeah.
And it's going to get me to ask every single person I talk to about how, not just how they're using AI, but like productivity increases at your bank. Like, what are you seeing? How are they using it?
We're doing a lot in AI, actually.
And it's increasing productivity?
It sure is. I mean, to give you a sense, last year in the fourth quarter, we had 2 Gen AI projects going through our risk evaluation and implementation. Today, we have 30. Wow. And there's about a dozen per month that are coming into the pipeline. Software engineering is being made much more productive. We're seeing all manner of internal process improvement, and now customer-facing applications as well, things that make the loan approval process seamless and more effective, more personalized service.
So is that going to increase earnings for you?
Look, I think it will certainly create capacity for us to then invest more. Our modus operandi is to harvest and try to drive efficiencies in the baseline costs so that we could deploy those expenses into investments.
A few years ago, I used to actually drive up to make a deposit. I used to talk to a teller. I mean, I was a kid at the time, and had my little book. But having said that, I don't talk to a teller for the most part anymore. So will AI, in your estimation, we are talking to CEOs, our tech team just did a big AI report, and they're talking to executives across industries. Everybody seems to be in on AI. But in terms of Fed Chair Jay Powell saying AI hasn't really impacted the labor market yet. Will it? Does it? It has to, right?
Look, I think in the end, AI will touch almost every element of human life and commercial activity, and ultimately will supplant many of the more rote processes that we use people to do, but it'll mean people could do other things. This will be a change in the labor force in terms of what people are doing. And there's things that people can uniquely do. Make judgments, be creative, interact with other people, lead organizations. I think what's incumbent upon all employees, and I think about this myself, is where can I shift my activities to where I uniquely add value?
People matter. You matter. You matter.
Oh, thank you.
I'm just saying.
You matter.
Zach Wasserman, thank you
Pleasure
so much.
to be with you.
This is the Bloomberg Businessweek Daily podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business App. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
So next with us, we want to get into what we have been talking about a lot this year, Matt, and that is the AI and data center build out. It is really one of the biggest stories of really this year, but also I feel like the last few years. Question remains of where all the power needed for them will come from and who will pay for it. And on that, we had NextEra Energy. It's a clean energy company, focuses on wind, solar, and battery storage energy. They announced plans to expand into natural gas, including a power plant deal with Exxon and Google, and plans to buy the gas retailer Symmetry Energy Solutions. The company also announced a deal with Meta to supply it with both clean energy and evaluate a new gas-fired power plant out in the Midwest. And then don't forget, back in October, the company also made some headlines with plans to revive a nuclear power plant for Google's data centers. This has been an all-in theme, if you will, this year. So let's get into it with two of our team members, Bloomberg News energy reporters Will Wade and Josh Saul, both here in studio. So guys, I mean, deals being made. We know that there's a lot going on. Josh, let me start with you. In terms of significant changes, is a lot of this just talk, or are we starting to see action in terms of changes to the grid, adding capacity? What are we seeing?
Thanks. First, I'd say NextEra, not just a clean energy company. It's a huge utility. And then they have a big development arm that historically has done a massive amount of clean energy. What's changing is that that development arm is going more and more into developing gas, and then also turning back on a nuclear power plant in order to power these data centers. So it's what we saw was really investors looking at that change and saying, we're not sure that change is happening fast enough and strong enough for what we expected.
So, but they are like a best-in-class developer of especially renewable energy, right, as well, hence next era. Can they become a best-in-class gas developer?
The investors we talk to think that they can, but similar to what we've seen with some of the independent power producers, there's just a really big hunger among investors to see these deals coming faster and faster. And investors want more details. They're fine to see a big new announcement saying that we plan to do things with Google, but they want to see signed contracts for deals with price points and timelines. And when we don't see those kind of details, we see big share drops.
Well, that's it. Will, come on in on here, because I think, some of what I was hearing for a while too, was that when it comes to companies, especially kind of the Mag 7, the big hyperscalers, they were signing up or announcing deals with a lot of different utility companies, but because they wanted to make sure wherever they got their power, they got power, and that maybe not all of that would be carried out. In other words, they wouldn't get power from all of them.
Yeah, we've seen just deal after deal after deal. All these tech companies, they need as much electricity as they can get it, and they need it yesterday. They can't bring it on fast enough. And we've seen a lot of people talking about building power plants, but we really need to see these plants actually getting built and getting connected to the grid and sending real electricity.
Why aren't they getting built? Is it because they're expensive? There's regulatory issues? There's where you build them issues? Like, what is it?
There's a lot of regulatory issues. It used to be expensive, but tech companies have so much money to throw at the problem that I wouldn't say that's top of the list nowadays. But there's definitely connection problems. We need to build the wiring to deliver the power. There's just so much stuff that has to happen.
I can't remember who wrote it, but a couple of years ago, there was an insane Businessweek story about how difficult it was to put up lines, right, from power developers to the end customer. And it took, years and years of trying to get through this regulation. Is there any sign that this administration is going to be getting rid of that regulation as it has, wanted to do?
I've written stories like that. There's a power line that was going through Colorado that had been planned for 17 years to get to wind energy from Wyoming to, all the people in Southern California was where that line was supposed to go. And it just kept getting hung up on different things. The Trump administration has made announcemements and has executive orders about clearing out red tape and making all of this happen faster. But the actual grease, what's needed to speed that up, I think takes even kind of deeper work in these regulatory agencies, and it remains to be seen whether any of that bluster actually ends up speeding things up.
Big executive orders just canceling state regulations on this and taking over with federal control.
Well, that's the difference, right? Because the states have some say in all of this.
They do, and the executive orders can't just wipe out existing laws. As much as Trump thinks sometimes he has that power, he doesn't have all the power he thinks he has. So all of these things that the president has said, we're going to do this, it really bumps up against the realities of the regulatory process.
It does seem like this administration is against certain forms of power generation. Wind, for example, it's no secret that Donald Trump hates wind power.
Yeah.
He cares a lot about birds, and he's worried about them.
He's taken huge steps to make it much harder to develop wind power and solar power, and he really would love to see more gas and anything to do with fossil fuels. But it's a short-sighted policy. We really do need everything. And, solar is the fastest thing we can build, but gas is pretty close to it, and that's probably what we're going to see a lot of real soon.
But if we're going to build 15 gigawatts of power, new power production in the next, 7 years, don't we need to use every possible source?
We definitely do. But what we saw, I was pouring through the Next Era release today, and you see their renewable plans kind of going up through 2030, but then there's the phase out, the Trump phase out of clean energy tax credits, and then they sort of plateau.
Well, the other thing is nuclear, and we've talked a lot about nuclear.
Sure.
This is not, everybody's talking about it like it's going to just happen tomorrow, and that's not the case. This is years in the making still.
The line I've been using about nuclear for the past few months is that there's a lot happening in nuclear and there's nothing happening in nuclear. So lots of people are talking about it. There's smart people trying to do smart things. It just moves slower than anything else we write about.
So nuclear, I guess, must be almost as beloved as coal and natural gas by this administration. Is what we're seeing with NextEra, is that kind of an admission that the clean energy, renewable economics without these tax credits just don't really work out?
NextEra makes the point a lot that the clean energy is the fastest way to hook up new data centers. But I think they also see that with the headwind of the Trump tax credits going away, they need to, in order to get the kind of earnings growth that investors expect, they have to expand beyond clean energy and do a lot more gas, which they've already done with their regulated utility, but they need to do with their unregulated development arm. And they need to get this data center game really dialed down.
But we've talked, right, guys? I mean, when it comes to wind, solar, like these alternative energy, they financially make sense for a lot of businesses, much more than they did initially, right? They make sense in terms of the investment, the cost, or no?
Wind and solar are the cheapest forms of new power to build.
Yeah.
Have been for a while.
So why aren't we doing more?
Well, but also, try getting a turbine right now. I mean, it's not
a gas turbine.
No, a
wind turbine.
A big wind propeller, right? Mm-hmm. Isn't the waiting list years?
It's the gas turbines that we're seeing the biggest wait list for these days, and especially because the hostility of the Trump administration for the wind farms. I haven't heard as many complaints about.
So you can get the wind turbines, you can get the windmills, but you can't get the gas turbines.
So you can buy that wind turbine for your backyard, okay?
But it's hard to connect. There's still a years-long wait to connect new power to the grid.
Yeah, you run into the same sort of permitting and roadblocks that you do kind of with anything.
Well, is the grid ready for all of this extra energy? I mean, Josh, that's the other thing that we've talked about, I feel like, for years.
So that gets us another thing that my team has been talking about the most recently, which is affordability. Just 2 steps to get there. Upgrading the grid in order to add all these new data centers and also all this new clean energy just takes a lot of upgrades, a lot of making the grid stronger, better, faster, more transmission lines running around to connect in both data centers and also to connect in new forms of power, whether it's a gas plant or solar. All those upgrades cost a lot of money. Those costs are spread out pretty broadly among all customers. So we're seeing big rate increases, big bill increases. For customers, and people are angry. People are really mad, and we saw that in elections in Virginia and New Jersey. Yes, and we expect to see it in the midterms next year.
It's so funny. I was just with a bunch of family down like in South Carolina, and that's what we talked about, power prices and how they are incented to do things like, air conditioning, do it, I guess, at night or something. And then turn it off like when they get up so that the house stays cool, but they're not taxing the grid when everybody else is.
Some of that's good. Some efficiency is good, but the level of anger and people talking about it the way they've historically talked about gasoline prices, or more recently eggs and groceries. The fact that that's now sloshing over onto utilities is a rough thing for these companies to deal with.
Is it just likely to get worse, Will? Because it's just the demand is increasingly there.
Yeah, we definitely think power prices are going to continue to go up. We'll hear a lot more about it next year during the elections. And don't forget about the cost to upgrade the grid to protect it from climate change issues, wildfires and hurricanes. That's another cost that's everyone is going to have to bear.
One way an analyst put it to me is power bills are going up across the country. Different reasons in different places. Might be going up in California because of wildfire resilience. Might be going up in Baltimore because of the proximity to Data Center Alley. But power bills are going up almost entirely across the country.
Can I just ask on nuclear, Will, because this is your bag, right? I get that there won't be too many new projects coming online anytime soon, right? You were down at the opening of a new nuclear plant in Georgia.
That was last year.
I know, but I remember you talking about it. But what about recommissioned?
It was a big deal.
What about decommissioned plants being brought back online, like 3 Mile, like Palisades? Like, how many of those are we going to see that will increase the nuclear power capacity soon?
It's a short list. And almost everyone on the list it's happening now. Like the NextEra one, that's the Duane Arnold plant in Iowa. We heard about that just a little while ago. There are 3 Mile Island's coming on in 2027. Palisades is coming on January, February. And after that, there's just not that many that are good candidates. So we're going to hear more about the ones. I think people are exploring them. There's the VC Summer plant in the Carolinas. So people are looking at doing that for everyone that they possibly can make an economic case for doing it.
Cool. I mean, some of the old ones, they cut them up and took them away. I went and toured one a few years ago in Vermont, the Vermont Yankee plant, and that plant was decommissioned when power prices were low, when we were long power. And I went up there, and by the time I went up there in I think 2023, we were starting to see some of the increase in power demand. And while I was there, I was a little like, you guys sure you want to cut this up? But I mean, the process had started, it was decommissioned, they cut the thing apart, and it was all taken on special trains to Texas, where it's buried very deep in the Texas dirt, because that's what you do with radioactive material. Yeah. You can't fire
Texas
that.
is hot.
I mean, you got to do something with this stuff.
Can't fire that one back up.
Hey, guys, thank you so much. Really enjoyed this. Really smart. Josh Saul, energy reporter at Bloomberg News, here in our Bloomberg Interactive Broker studio. Will Wade, also energy reporter at Bloomberg News, also right here in studio.
You're listening to the Bloomberg Businessweek Daily podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business App. Or watch us live on YouTube.
Play ahead in our second hour of the weekend edition of Bloomberg Businessweek, including the CEO of Compass Pathways back with us. That's the company behind treating depression and PTSD using psilocybin. We'll get an update on their route to FDA approval.
Plus, tips on organizing a loved one's estate and the perfect timepiece gift. Yes, we're talking about watches for all types of people in your life. Price tag included, courtesy of our watch guru, Chris Rouser.
I had lots of gift ideas off of that one. Hey, first up this hour, it's called the Solar Sunbather. It has 3 wheels. It looks like it belongs in outer space. It could possibly, though, hit the roads in 2026.
No, it's not a SpaceX tricycle. We're talking about the futuristic-looking solar-powered vehicles behind Aptera Motors. This is a California-based solar mobility company. It was formed back in 2019. It's in a testing phase to release its cars on the roads in select states next year. For more on the company's plans, Carol and our car lover and very serious driver, too.
Yes, he is.
Matt Miller caught up with the co-CEO of Aptera, Chris Anthony.
Hey, Chris, good to have you here with Matt and myself. I know he's going to take over in 1 minute because he's our car guy, or one of our car guys. But tell us a little bit about where the company is. You're in your, 6th year? Tell us about where the car is, where you're going. You're on the road, you're testing. Tell us a little bit about it.
Yeah, Aptera is currently in final validation, and we're looking to press into full production in 2026. And it's just exciting to see the vehicle come together and see solar mobility finally on the road.
You know, clearly the current zeitgeist is not what you would consider pro solar car. The administration seems not to be the biggest fan of alternative energy or renewable energy. On the other hand, they've given you a ton of what I must believe are very incentivizing tax rules in the current One Big Beautiful Bill, especially if you're going to manufacture in this country, which you are, right?
Yeah, we're manufacturing in Carlsbad, California, but there is a global supply chain for vehicles like this, and we hope that there's enough investment in the U.S. to bring more and more of that supply chain over in time.
What are the critical pieces that you need? Like, what do you need to import and pay tariffs on, and what can you get from this country in order to build your car?
Yeah, initially we partnered with LG Chem and a company called CT&S in Korea to make our battery packs. But we're bringing the cell manufacturer over to Tennessee and bringing the equipment over to manufacture our battery packs here in Carlsbad, California. So that's been assisted by a California Energy Commission grant, and we hope to have all that production here in the U.S. Hopefully by the end of 2026, maybe 2027.
What's the most difficult aspect of what you're doing and trying to create a market essentially for it and then ramp up? Like, what is the trickiest part right here?
Yeah, most companies start with a minimum viable product. In transportation, it's kind of about the styling of the vehicle and how many cup holders it has, how many passengers. But that's not really where we started. We started with how do we make the most efficient transportation possible? And then it became this solar-powered masterpiece that we have now. But we really didn't know what kind of market there was. We weren't able to study the market for something that didn't exist. So we kind of had to just build what we wanted to bring to the world and then hope that people really liked it. And luckily, within the first couple of weeks of announcing it, we had over 4,000 orders. Now we have almost 50,000 orders for the Aptera. And we think people are really excited about transportation built for efficiency's sake. and something that can be solar powered, something that you never have to worry about putting gas in it, something you never have to worry about plugging it in.
Do you have to worry about range?
The standard version of the Aptera gets 400 miles of range, plus it gets the solar charging that it gets every day just by leaving it out in the sun. But we do offer larger range models of our Aptera up to 1,000 miles of range.
So that's easily enough
Yeah.
For like my daily commute. The car looks really, I mean, it looks cool, looks weird, looks different. It's a three-wheeler. I guess that would be so that you can classify it as a motorcycle. Correct me if I'm wrong. And you've got these outboard fenders on the front, 2 wheels, and then 1 wheel in the back. Tell us about the design.
Yeah, you know, what most people don't realize is that 60 to 70% of your fuel at highway speeds just goes to pushing air out of the way if you're in a typical SUV or sedan. So we started, you know, with aerodynamics when it comes to making transportation more efficient. That's why it looks more like a fish than a box. And with something that looks so unique, you also want to eliminate, you know, any weight you can. So it's very lightweight. And that made it 3 wheels. So there's less rolling resistance, less weight. And that 3 wheels has some unique advantages, and they were classified as a motorcycle. But because it's 3 wheels, you don't have to have a motorcycle's license. Because you have something over your head, you don't have to wear a helmet. And in California, EVs are no longer allowed gratis admission to the HOV lane, the high occupancy vehicle lane. So we'll be the only EV that's able to drive in the HOV lane without any restrictions. So it's
That's interesting. That you can you can sort of weave through different regulations with a 3-wheeled vehicle, and that's why you've seen some of the coolest experimental vehicles from the Morgan 3-wheeler to this Aptera car. It's got room for 2 people inside, right? As well as, I guess, luggage or a pet or whatever you want to bring along. What's it like when you're driving around? I mean, everybody must be rubbernecking.
How come you haven't driven one yet?
Yeah, how come I haven't driven one yet, Chris?
Well, we need to get you in one soon, Matt. It's a pleasure to drive. It's super, super quiet. It's kind of eerily quiet because a lot of the noise you hear in a typical SUV or sedan is wind noise buffeting off the vehicle at higher speeds. But because the Aptera cuts through the wind so nicely, you don't really get a lot of that. So it's a very different kind of driving experience. It's quick. It's 0 to 60 in 5 seconds, top speed 100 miles an hour. And you know, it's definitely something that gets attention. If you are an introvert, maybe this is not the vehicle for you initially, because any Starbucks that you pull up to, you're gonna bring a crowd.
But you can take it off the beaten path, right? I mean, I'm sure I've seen the website because I recall pictures of maybe the Aptera on a beach or in the woods. It comes with, or you can buy, I guess, camping gear or a kit that goes along with it so that you can get out there. And plus the fact that it's solar charging, you can charge with the sun up to 40 miles a day, right? Means that you can really take it off the grid.
It's a little deceptive on the storage. There's actually 35 cubic feet of storage in the back. If you put the front seat forward on the passenger side, you have 7 feet of space from the tail to the tip. So you can put surfboards back there, mountain bikes. You can actually leave the hatch up, and there's a camping kit where there's a tent that goes over the back of the vehicle. So you can camp 2 people comfortably. But most importantly, it's very cool to think that you can drive 200 miles to your favorite camping spot. You can camp for a week, and you can come back with more energy in your Aptera than you left with.
Unless it rains, or no.
It does get less solar production, you know, if it's super cloudy or if it rains. You know, if it's cloudy, you can count on maybe half of the energy production. You know, if it's a whiteout snow, obviously you're not going to get much solar. But it's really a whole new vehicle category, a vehicle that creates its own fuel. There's never been anything like it where you purchase the vehicle and you're also purchasing a lifetime's worth of fuel with it.
Yeah. Hey, we're talking with Chris Anthony, co-chief executive officer of Aptera Motors, joining us from Carlsbad, California. You know, I mentioned that the company began in 2016, but it's really like an iteration of a company that goes back a while. I think goes back to actually 2006. It was a company, I think it liquidated, it came back as a second company, and now it's the third company. Is there anything, like if someone, you know, Googles, they might be like, God, this feels a little uncomfortable. Anything that connects you to kind of the history of this company from day one?
Yeah, I met Steve Fambro in 2005. He had a vision for how to make vehicles more efficient. He was a bit perplexed that there are some vehicles on the road that you would think should be efficient. Things that look aerodynamic, a VW Bug. Well, why doesn't that get more than 50 miles per gallon? It really all comes down to the aerodynamic losses, the weight losses. So how would you make the most efficient vehicle possible? And that's what Steve and I set out to bring advanced engineering to, is if you really tackle the problem from a first engineering principles perspective, what do you end up with? You end up with a vehicle that looks more like a fish. It's about 2,000 pounds. It has 3 wheels, and it has an electric powertrain because that's the most efficient way to get energy to the wheels. By happenstance, we created something that gets some 350 miles per gallon equivalent. And when you do that, you can put a relatively small solar package on top, but get really useful range. We get about 40 miles a day of free power just from leaving the Aptera out in the sun. So if you're like the average American and you only drive 30 miles a day, 40 miles a day of solar charging is great. You just never have to plug the vehicle in. You just leave it outside and it takes care of all your average driving needs.
So, Chris, is this something that you really see for local driving? I'm curious if it taps out at 65 miles an hour, or how fast can it go? And can it be on highways? Or
what's your VMAX, dude?
Thank you.
Yeah, the suspension handling characteristics are great. It's a very spirited drive, 0 to 60 in 5 seconds, but you're actually faster, at the upper ends of the speed, 30 to 60. Is faster, and a top speed of 100 miles an hour. So definitely driving it on the highway. It's made to be a Southern California vehicle. Lots of sun out here. It's made to be more than, just a commuter vehicle. You can, take it and, do the family shopping. You can, pick up the kids from the school. You can, do a lot with this vehicle in terms of usability.
I also see that it can fit individuals of up to 6'8", which is important for me
because you're 6.
I'm 6'4", but I need leg room, right? I get claustrophobic in normal cars and planes, so I need my space. And by the way, 0 to 60 in 5 seconds. When I was in college, that was what a 911 was doing. So that's
respectable.
Really respectable. I mean, there's still a lot of cars that can't do that. Of course, you got the instant torque here. Getting up to 100 miles an hour, I rarely exceed that speed when I'm driving to and from work. I try to come close when there's nobody around. How many orders have you got for this? I mean, how many people do you think you're going to sell this car to when it goes into final production?
And just got
20
about 20 seconds, yeah.
We've got almost 50,000 orders, but we hope to deliver up to 1 million Aptera in the next 10 years. It took Tesla 13 years to deliver their millionth vehicles. We hope to do it in 10.
Well, I can't wait for Matt to try it out and report back, and then you can come back on with us, Chris. Chris Anthony, co-CEO of Aptera Motors, joining us.
This is the Bloomberg Businessweek Daily podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business App. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Well, remember when we couldn't stop talking about psychedelics and their potential use for treating a range of related mental and physical health conditions? Well, this was during and just after the pandemic. But then in 2022, we saw prices collapse, money was pulling out, investors backing off, and trial results weren't what they needed to be. Well, it's now having a resurgence.
Just this year, U.S. Health and Human Services Secretary Robert F. Kennedy Jr. said he could envision approval for psychedelic drugs as treatment for depression and trauma if clinical studies have been conducted. Plus, Bloomberg Intelligence Analysis estimates that the market could grow to $7 billion in sales by 2032. Analysts say that market potential, quote, is clear, but companies could still run into issues with regulators and in scaling up.
Yeah, still not a straight path forward. Hey, back with an update, though, on his company's path to FDA approval for some of the psychedelic treatments. We caught up with Kabir Nath. He's chief executive officer of the small cap $515 million market cap company, Compass Pathways. Kabir joined us alongside Alexis Christoforous, who was filling in for Tim.
So we're excited about the fact that we're now in a position to potentially accelerate getting this medicine to patients who so urgently need it. Let me remind you that there are 3 million patients living with persistent depression in the US. fewer than 5% of them today are treated with a medicine that was actually specifically studied for or is approved for treatment-resistant depression. And this is depression that is chronic, it's refractory, often people are unable to work. It has dramatic direct healthcare costs in terms of costs of emergency room admissions, in psychiatric care, but it also has real social costs for these people. So what's changed is we've had a really excellent conversation with the FDA about their desire to see, subject to us continuing to produce really strong results in terms of efficacy and safety, their desire to see this moved more quickly. We've completed the enrollment in our second final stage study, which we did ahead of expectations, which is really down to the great...
So this is a phase 3?
This is a phase 3. This is the second of our final stage studies. We've completed the enrollment of that. We expect to have the primary data from that in first quarter of next year. That will give us the second of our final stage studies. And with that, we are actually excited to be able to submit that to the agency and look to an accelerated approval.
Exciting. Wow, that sounds like a really big move. I'm curious, just remind us, and we were talking with our healthcare team, how you guys designed the trials or research program to avoid some of the pitfalls that we've seen with, I think about the ecstasy and the MDMA drug application, that was for PTSD. How did you guys avoid some of those pitfalls?
So first, we had the opportunity to learn from some of the lessons. We've been in an excellent dialogue with the FDA now for some 6 or 7 years since we first started this process. Yeah, as we know, developing new medicines takes a long time and a lot of commitment.
Yeah.
We've done this in a very robust and rigorous way. We are collecting full side effect data. We're collecting all the issues, not just potential side effects such as headache and fatigue, which are transient, but also things like liking and so on, to make sure that there is really no abuse potential for this. And we've been collecting that right from the get-go.
Is there any abuse potential for this?
There is no history in psilocybin of people actually seeking it out or of any abuse potential with psilocybin, which is an important point.
I'm putting my investor hat on for a moment, and I need to ask you about intellectual property and how you handle something like that, because psychedelic compounds don't sort of fit comfortably into that compound, if you will, because a lot of them are natural. They can't really be patented, if you will. So how do you deal with that, and to what extent is your medicine, hold patents or have intellectual property?
So our medicine, COMP360, is a fully synthetic formulation of psilocybin.
Oh, okay.
We have polyphenol patents that address that, and therefore we have robust protection till 2038 with the potential for extension around that, because again, we went for a fully synthetic modern medicine.
Have you talked directly with the Health and Human Secretary Robert F. Kennedy?
We are focused on an excellent relationship with the psychiatry division of the FDA.
Okay.
We've been working with the same folks for 7 years.
Because he has certainly made some commentary around this that has given, hopes and expectations that this would move along more rapidly.
We're happy that there are senior figures in the administration who believe, like us, in the potential for psychedelic therapy, but we're really focused on delivering the right efficacy and safety through our studies and working directly with the division that's going to approve us.
So trial 3, the third phase early next year, give us an idea of a timeline. I mean, when might we see something like this come to market?
We will get the primary data, as I said, in first quarter of next year.
Right.
We will need to submit some more data later in the year, but we are looking forward to being in a position to complete a submission to the FDA in the latter part of next year, and then we'll work with them as expeditiously as possible on a potential regulatory approval.
So 2026, 2027? I know this stuff all takes long, and I know we constantly am asking you, but I think because it's been so much out there for a while, a decade and then some, right? I think we're all trying to, certainly for an investing audience, understand when this actually hits the market.
We are preparing to be ready for a commercial launch from the end of 2026.
Ah, he said it. Well, thank you.
What does something like this What does something like this cost?
That's the question.
So it's premature to discuss the pricing for this at the moment. First, we actually still need to see some of the longer term results from our studies.
Right.
In particular, we need to see over the course of the first 6 months what the potential for a second dose is, and really therefore how many potential sessions that a patient may need to have in a given year.
That's a great question, because you're talking sessions. So this is not a drug that someone would continue to take, or a lifelong sort of drug, if you will.
Absolutely, and it's a really important point there. What we have shown in our study so far is that a single session can produce a dramatic response that lasts for 6 weeks.
Wow.
Today, either it's a daily oral or there is a product, esketamine, which you will need to take maybe 30 to 50 times a year. What we are showing is truly transformative, therefore, for these patients with this infrequent sessions.
We're talking with Kabir Nath. He's Chief Executive Officer of Compass Pathways. Ticker is CMPS. He's here in our Bloomberg studio, Bloomberg headquarters. Kabir, one of the things I think about then is if all goes as you anticipate, and you've talked about the market for like who this is for specifically, then do you move on to other uses and other treatments, whether it's PTSD, whether it's drug addiction? Like, I'm just curious how far you can go with this.
Yes, thank you, Carol. And we are designing, have in fact already designed and finalized the design of a study in PTSD. PTSD affects 13 million people in America. And while there's this view that it's prevalent among veterans and so on, it absolutely is. That's actually only around 15% of that population.
Only 15%.
15%. Actually, 60% of people suffering with PTSD are women. And so this is a very large population. The only 2 medicines approved for PTSD were approved in the last century. So this
we
is
could use something new.
Something different.
And so we are very excited about that. We have designed a study, and that we will be kicking that off next year.
I want to go back to the question of price.
Sure.
What about insurance, and how does that play a part in all of this?
From the get-go, Compass was set up in order to ensure broad and equitable access for patients, and that means the ability to work with insurers, both commercial and government. With the data we've already shown, as I say, a single administration producing statistically significant reductions in depressive symptoms after 6 weeks, we've already started to demonstrate the value that this can bring to the healthcare system. Patients living with persistent depression frequently end up in the emergency room. They sometimes have inpatient psychiatric care. There are direct costs to healthcare systems, and we have already started to demonstrate the value.
You know, and forgive us, Kabir, we do keep going back to, I know you can't talk about price or your guys are figuring that out, but we kicked off saying, according to our Bloomberg intelligence team, that this market, psychedelic drug development, could grow to $7 billion in sales by 2032. How much of that do you think is, or how much of that market size do you think you could get? And I'm curious.
So we have the potential to be ahead of other companies in this market by 2 to 3 years. And we're excited about the opportunity to treat lots of patients. So for us, this is about the ability to make inroads into those 3 million patients that need a new treatment option. The only medicine that's actually approved and is being really promoted for this population today is treating maybe 70 to 100,000 patients out of that population of 3 million.
Right.
So what we're excited about is the ability to bring this new medicine to those patients.
Is it $1 billion drug? Would you anticipate?
We would hope that if we can successfully treat, if we can treat a large number of patients.
Well, especially if you get, and you expand out. Do you go alone?
For other uses,
Do you go alone?
That's our intention. We've always said clearly that we believe that we can do this on our own in the US market, and that's our intention.
All right, what about side effects? I mean, folks are listening to this. A lot of folks are hoping that this is all going to work and come to market sooner rather than later. What are some of the side effects, though?
So on the day of dosing, there's some headache, some nausea, and that passes by the second day at most, because this is a day in a treatment center. We have a fully independent group of scientists and clinicians that reviews all our safety data on a regular basis. They have access to data from all arms of our studies, and they have seen no unexpected or concerning side effects that have caused them to alter the course of the study in any way.
And just remind everybody, and we just got about 40 seconds, Kabir, right? When it is given to a patient, there are folks around to really watch the process, make sure things go.
You're not taking this in your bathroom by yourself.
No, this is very much delivered in a safe environment, in a medical environment, with somebody in the room who is medically trained, who's there just to assure patient safety and comfort.
Do you see the finish line?
I absolutely do, and we're excited about that potential.
I just think how long we've been reporting on it and talking about it. It's really fun to kind of be on this journey with you.
I'm just wondering quickly, regulatory hurdles in 2026, do you think that it is going to be a more friendly regulatory environment?
With the psychiatry division, we have an excellent relationship, and that's been consistent over 6-7 years, and we expect that to continue.
Yeah. Sounds like you've been talking to them for a long, long time. Kabir, thank you. Nice to have you in studio. Kabir Nath, he's Chief Executive Officer of Compass Pathways, joining us right here.
This is the Bloomberg Businessweek Daily podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business App. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Over the next couple of decades, an estimated $90 trillion in assets will be passed down from the silent generation and baby boomers to their Gen X and millennial heirs. But this so-called great wealth transfer has a confounding corollary. Our parents haven't just been accumulating money. They've also been accumulating stuff. So much stuff. So writes Bloomberg Pursuit's editor-at-large, Chris Rausser.
With us on tips on what to keep, sell, and donate, and just the concept in general, the history of it, why, as Americans, and when we started collecting so much stuff, is Chris Rausser. Chris's story is on the Pursuit's cover story of the December issue of Businessweek magazine. It's available now online, on the terminal, and on newsstands. I kind of want to start with Pez dispensers. Because that's how you start the piece, Chris. But this was a great piece, Chris. It's not just for people who have elderly people in their lives with a lot of stuff. It's also, if you have a lot of stuff in your life, you can take a lot away, because there's a lot tied up in physical things, memories, just feelings, holding on to things,
guilt,
history,
fear, losing stuff.
It's really complicated.
Yeah, it's very complicated. So starting with Pez, which is a great place to start. Nick Malice is a comedy writer in LA who I encountered while reporting for this story. And his mom had these 2 great big lofts in Soho in New York. Sounds very glam. But they were filled with stuff. And it was a range of stuff that was like a little junky. Like she would pick up shelves from the street and bring them into her apartment and then fill them with stuff. But a lot of that stuff was really good. Like she was an avid collector. She had like partied with Andy Warhol. She had some really good pop art. And Nick had to go through these 2 apartments that were jammed to the ceilings, and it took him years. And he found, throughout all of his exploration and dealing with it, 10,000 Pez dispensers.
Oh my God.
You think that like your parents have a lot of stuff. His mom had a ton of stuff, and it was very difficult to deal with. As I said, it took years, but throughout the process, and he found that it actually brought him closer to her, going through all of her stuff and taking the time and learning about what she cared about and all the cool stuff that she left to him as his inheritance. So I went into this story thinking, all right, well, this is a problem that like we're all annoyed about, like both our parents' generations, my generation, generations below. But also there can be some upsides and there can be some beauty to it. So let's go in with a positive attitude.
Well, I love what he said, that in going through it, I'm sure he was incredibly overwhelmed at the beginning, right?
Oh, yeah.
But then understanding, like, as he went through them, like, he got a better feeling about his mom.
Yeah.
And who she was.
And a key thing that Nick did, which everyone should consider doing, is he got help. He got his friends to come in and help. He paid people to come in and sort the Pez dispensers. He got someone from Antiques Roadshow to look at the really good stuff. There's different tiers of help. You can get an organizer to come in and do everything. You can get a junk company to come and get rid of everything. Or you can go through stuff if you really want to and sort of set it up into different categories, like valuable, not valuable, whatever. But a key thing is help.
I have to say, like, both my parents have passed away, and I remember my mom was quite the collector, and it was Hummels, it was Compare, it was Delft, it was a lot of stuff.
Hummels are a classic.
Hummels are a classic. And I just remember going through stuff, and there was a point where we got so tired of going through stuff, like we were just putting stuff out on the curb, and in the process, we threw out a clock that was actually pretty valuable, but we were just so overwhelmed. So how do we kind of go, like, talk to us a little bit about the experts that are out there that help us with this process to figure out what's valuable, what do you keep, what do you pass on, what do you throw out?
Yes. So there is a whole cottage industry that's set up to deal with exactly with this. Some people call it generational decluttering, which is not only when people are passing stuff down to the next generation, but maybe they're just downsizing because they've retired, they don't need so much space, and they don't know what to do. So you can get an organizer who will really help you go through everything. They'll give you organizational tools, which we all need. They'll help you digitize photos. They have all these tools that like you don't even think about that will shrink the stuff that's in your house, and they'll get the stuff out of your house. And these are people who are practiced at it. They're emotionally sensitive. I talked to some really cool people who are really thoughtful. And it's hard to get stuff out of the house. People, our parents, their parents were Depression era, so they wanted to hold on to stuff. They wanted to hold on to paper records.
Go into that, Chris, because I think about like, why the heck do I've actually talked about this with my therapist. Like, why do I have to hold on to so much stuff?
Yeah.
Like, even after my parents are passed, like, it's like, these aren't them anymore. But it's like silly things, like even seeing their handwriting. Like, why? But what is it about that we got to this point?
It's a lot of things. So like I said, our parents grew up with Depression era parents. If you're like an aging millennial Gen X, you grew up in a house where like people saved stuff against maybe future emergencies. Like maybe your parents had 9 flashlights in a drawer because like you never know when you're going to need it. Anyone younger than us, younger than 35, grew up with Amazon. So they are, and they grew up with the internet. So everything is immediately available. Things are not as high quality as they were, like products, home products especially, as they used to be, or as beautiful from like the early 20th century. So they don't have that association of this is nice, we should keep it. Whereas our parents and even us, like it's hard for me to get rid of books. I feel like books should have a future.
Yeah.
Have you seen my desk? I can't get rid of books.
I've changed my thoughts completely on books.
I know you have.
You got to get rid of books. Everything's on my Kindle. It just we live in New York City. There's not enough room for books. Do it all on your Kindle and be done with it.
Yeah.
I mean, and I know that's
clothes
clothes too.
Can I just say though, I thought it was interesting. I just was like the China collection and then the China cupboards. I remember my grandmother, like a massive, and then my mom had them, and it's like I have little ones, but it's like getting away from that you had these things, then you displayed them.
Yes, and that's a thing when the middle class in America was born, and like starting in the mid 19th century, that when we started having factories and middle managers and all these people going in through the beginning of the 20th century. That's when Tiffany started making silver. That's when people could afford. It was before that it was either like extremely rich people or like working class.
Right.
And then there were like, mass-produced things could be actually beautiful, and we could own a lot of them, and we should display them to show like where we have reached as a family. And then that created this like snowball of like we should show our china, we should have fine silver that we don't use. That got us to where we are today.
I love the dive into the Industrial Revolution in this piece and really what brought the American middle class and our obsession or fascination with stuff. What I also love about the piece, Chris, is it required some self-reflection from you and also some anecdotes from you about this happening while you were essentially thinking about this piece. Talk to us about your dad's gun collection.
So my dad's gun collection was the reason why I thought of this piece, actually. My dad has something like 70 guns. He'd been collecting since he was a kid. So some of them are historical. Some of them had a lot of emotional resonance. And he has a room in his house that we call the Second Amendment room, which is full of guns. And my brother and I live in the city. In New York City, we don't want a lot of guns around.
Well, guns are not, there's certain guns. It's very hard to legally have a gun in New York City.
Yeah. And also a lot of them are hunting rifles, and I don't hunt a lot.
Shocking.
So my dad decided, he was like, you know what, I'm mostly just cleaning these. Like I don't really use a lot of them that much, and it's time for me to get rid of them so my kids don't have to like deal with it. So I was so proud of him. He photographed all of them. He made like a PDF. He put out an RFP to dealers to be like, who will give me the best offer on this all throughout New England. He lives in Maine. And then a guy at the Kittery Trading Post in southern Maine was like, this is my offer. And my dad said, that's great. And he asked my brother and my step siblings which guns we wanted. And then he just sold all the rest of them to the guy at the Kittery Trading Post. And I was like, this is amazing. I love this. And so I told my mom, and she was like, wow, that's awesome. What about all the wooden mallards?
What's the market
that your dad collected?
Yeah, that my dad had.
What's the market for wooden mallards?
So there is a market for wooden mallards, and there are markets for all these things. You think no one wants just silver, and you think no one wants china, and that's like and brown furniture, and that's sort of true. But like the elite stuff, the best stuff, actually there is still a market for it. So like you can go through and find the people that want the wooden mallards. And I thought, okay, this is something, I got to do a story.
Oh my God. I love it. I think it resonates for so many of us. Well, I'm just going to say, if you go through stuff, you might be able to pass it off as gifts this holiday season. Or if not, actually, in our family, we have sometimes done that, like pass down.
Does anyone in your family have a watch collection?
I have a little bit of a watch collection.
Oh, okay. Well, that's a perfect segue then.
So tell us about, you actually give us a gift guide for every specific person in your life. When it comes to watches.
Which is a great way to organize it, because it's not like, okay, these are the best watches for under $300. These are the best watches for under $1,000. These are the best watches that are $100,000. This is the best watch for this person in your life. I love that.
Yeah, thanks. Yeah. Normally I do the price point gift guides. This year I was like, I'm going to actually go through specific situations that people have already come to me to ask for a gift or for a watch for themselves. My nephew recently asked, he wants a steel watch to take on job interviews because he's going to graduate college. So I recommended a Tissot, which is a very reasonably priced brand, really good Swiss watches. A lot of people ask me, they're like, I'm buying my first Sirius watch, and I send them to a multi-brand store where they can look at a lot of different watches. They always come back either with a Rolex or an IWC. So I recommend some IWCs. One of my friends has got a new finance job, and he said,
I love this one.
Everyone in my office wears a different watch every day.
Of course.
And I was like, I want to work in that office. So
do you not have a watch to wear every day? Different
Carol, I'm wearing 2 watches.
That's what I'm saying.
Today.
I'm thinking you're on it. The nonprofit lawyer, can I just say, for a nonprofit lawyer, I was curious about like what you were going to come up with. I was not expecting a $4,000
Still a lawyer. Still a lawyer.
That's true.
It's funny. We actually went through, and Felix on my team asked ChatGPT for the same recommendations. And ChatGPT came up. I think it must have scraped the story, because although we don't let people scrape our stuff, but because it came up with a lot of the same recommendations. And for the nonprofit lawyer one, it came up with the exact same brand, Nomos Glashuta, which is it's like pretty obscure. I was like, ChatGPT, you've been listening. But this is my friend is an immigration lawyer in Chicago, an incredible person, and he was like, I want a grown-up watch to like celebrate my milestones and my marriage, but I can't be like a crazy rich person watch. And Nomos is
I love this watch.
Yeah, I love it so much.
It's really beautiful. But for all you guys out there, if you're looking to get something for the woman who wants an understated classic,
Cartier,
that tank watch.
It's always the tank.
Yeah.
It's always the tank watch.
It really is. Yeah.
All right, do we have to go?
We have to go.
Chris Rouser, never enough time. Thank you so much.
Thanks,
Happy
guys.
holidays. So glad we could do this.
Thanks.
Listen, how did you describe the Cartier tank?
Oh, I said if you're buying a woman an expensive watch and you're not considering a Cartier, you're a lunatic.
There we go.
Amen. Amen.
Chris Rouser, Bloomberg Pursuits editor at large.
And that wraps up our weekend edition of Bloomberg Businessweek from Bloomberg Radio. Thank you so much for joining us.
I'm Tim Stenovec.
And I'm Carol Massar. Have a good and safe weekend. Maybe clean out some stuff. Just recommending.
This is the Bloomberg Businessweek Daily podcast. Available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 2 to 5 p.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business App. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.